You asked for it, and we're delivering. Today on the deep dive, we're going straight into the numbers behind the recent buzz around the Colombo Stock Exchange.
Hmm.
We've got the latest weekly report right from the CSE, packed with everything, from the main market movements to individual stock performances.
That's right. And our mission, really, for this session is to take that, well, mountain of data and boil it down to the crucial insights.
Yeah. Simplify it.
Exactly. We want to give you a clear snapshot of what's been happening with the CSE lately without getting too bogged down in the details.
Okay, let's dive in then. Starting with the overall health of the market, the equity side of things first.
Sounds good. So looking at the main gauges, we've actually seen a bit of an upward tick this week. The All Share Price Index, the ASPI,
Right.
it's nudged up from around 16,379 to nearly 16,500. So 16,494.46 to be precise.
Okay, a noticeable move.
And the S&P SL20 index, the one focusing on the top 20 companies, that's also seen a small climb. Went from about 4820 to just over 4842.
So generally a positive direction for the main indicators then.
Yeah, that's the overall feel, a slight upward trend.
So both the broader market and the big players seem to be showing a bit of growth. Now, what about activity? Let's talk turnover.
Ah, yes, turnover. This week saw a pretty significant jump in the total value of shares traded.
How significant?
Well, it went up from roughly 11 billion rupees last week to almost 15 billion this week.
Yeah.
That's a substantial increase in money flowing through the market.
Wow. Okay. Nearly 15 billion. And who's doing the trading?
It is. And digging a little deeper into who's doing the buying and selling, we see a clear trend emerging. Domestic investors were much more active this week.
Really? Both buying and selling.
Yep, both their purchases and sales increased quite a bit compared to last week. But what's fascinating here is that foreign activity actually dipped.
Oh, interesting.
Yeah, both in terms of buying value and selling value from foreigners.
That is interesting. So local players really stepped up their game this week. Does that carry over into the volume of shares traded?
It certainly does. We see a similar story when we look at the sheer number of shares changing hands. Domestic volume. It shot up from about 457 million shares to over 780 million.
780 million. That's huge.
It's a massive jump. Foreign volume, on the other hand, saw a decrease. So it seems like the action this week was definitely happening, on the home front.
Right, domestically driven.
Precisely. And this increased enthusiasm, this energy from local investors, is also reflected in the number of trades executed.
Okay.
Both domestic and foreign trade numbers went up, indicating more participants were active overall, but there was a particular surge in domestic trading activity.
Gotcha. And just quickly, the number of companies listed and traded, any major changes there?
Nope. In terms of the overall landscape, the number of companies listed on the exchange and the number that actually saw trading activity remained pretty consistent week over week. No big shifts there.
Okay. Now, if we zoom out a bit, how have the main indices performed over the whole year so far?
All right, taking that step back. If we look at how the major indices have fared throughout the year, we see a bit of a mixed picture, actually.
Oh.
The ASPI, currently at that 16,494 mark we mentioned, it's actually up by about 3.5% since the start of the year.
Okay, so positive year to date for the ASPI.
Yes, but it's had its ups and downs, of course. It hit a high over 17,000, but also dipped below 14,700 earlier in the year.
But the S&P SL20 tells a slightly different story, doesn't it?
It does, yeah. It's currently sitting just slightly below where it started the year, showing a small negative change, minus 0.41% year to date.
Hmm.
And it's had perhaps a wider swing relative to its starting point, going higher, over 5,100, but also lower, down near 4,260.
So while the broader market has seen some gains overall this year, the very top tier of companies, on average, hasn't quite followed suit.
Interesting.
Yeah.
That raises a really interesting point about where the market's momentum is right now, doesn't it? It seems like the gains might be more concentrated outside of those very largest blue chip companies, perhaps.
That makes sense.
And looking at trading volumes over the last 4 weeks, that recent jump in total turnover we mentioned, the nearly 15 billion, it really stands out compared to the weeks just before it.
Right.
And if we compare this level of activity to the average over the past couple of years, we're definitely seeing a more energetic market recently, both in terms of the money being traded and the number of shares changing hands. Activity is up.
Okay, let's get down to the daily numbers for this past week then. May 19th through the 23rd, 2025. Any standout days?
It looks like Wednesday, May 22nd was the busiest day. Yeah, definitely.
Okay.
Highest turnover, highest share volume, and the most trades all happened on Wednesday. We saw over 4.5 billion rupees worth of shares traded just that day.
4.5 billion in one day.
Yep, and over 277 million shares changed hands. So quite a peak in activity midweek.
And how does that compare to, say, last year, just for context?
Good question. To put that into perspective, if we look back at the corresponding week last year, May 2024, the daily turnover figures were noticeably lower, generally hovering around the 1 to 1.4 billion rupee mark per day, much less than that 4.5 billion peak we saw this Wednesday.
Right.
And the share volumes and trade numbers were also significantly less back then. So it really highlights the increase in market activity we've witnessed this week compared to the same time last year. Definitely more buzz now.
Okay, clear difference there. Now, let's switch gears. What about the debt market, specifically corporate debt?
Right, the debt market.
Yeah.
Here we see a very, very different picture compared to the bustling equity market we've just been talking about.
How so?
The value of corporate debt traded saw a sharp drop, a really sharp drop, just comparing to the previous day within the report period.
Okay.
We're talking a fall from over 17 million rupees down to under 4 million.
That's quite a decline.
It is. And the volume and number of trades followed a similar downward trend. So much quieter on the corporate debt side.
All right. And closed-end funds, anything happening there?
Turning our attention there. Activity remained quite subdued, actually. Very quiet. Only 2 funds saw any trading at all.
Same as last week.
Yeah, consistent with the previous week. Still just those 2 active.
But we do have some details on how those 2 specific funds performed, right? The CAL5YR and the CALFYOF.
We do. The CL5YRCE FND, it held steady at 14 rupees, no change there.
Okay.
But the CLFYOF, that one saw a bit of a jump. It closed the week at 13.70 rupees, which was up from 13.30 the previous week.
So some positive movement there.
Yes, and it looks like the CLFYOF also saw more trading interest, relatively speaking. More trades and a higher volume of units exchanged compared to the other fund.
Got it. Okay, let's circle back to equities and look at the movers and shakers. Which individual stocks were really driving the overall market movement?
Right, looking at the impact on the ASPI. Focusing on the data from May 19th specifically, Cargill S made the biggest positive contribution to the all-share price index.
How much?
It added over 40 points just by itself. Significant impact. And then you had Mel's, Dialog, CTHR, and JKH also making pretty significant positive contributions to the index that day. It's helpful to see which specific companies are having the most sway on the overall index movement.
Absolutely. And on the flip side, the biggest losers for the week.
On the other end of the spectrum, yeah. Looking at the biggest percentage losers this week, Samsung Internet saw the largest drop, over 8.5% down.
Ouch.
Yeah. And then Baruwala Resorts, Tokyo Cement, actually listed twice there with slightly different identifiers, maybe Sigiriya Village. They also experienced notable price declines in percentage terms.
Okay. Now, you mentioned increased activity. Sometimes that involves large block trades, right? Crossings.
Exactly. And to give you a glimpse into some of those larger trading activities, we should mention some of the crossings that occurred during the week. These are substantial trades, often institutional, executed in a single transaction off the regular order book.
Any big ones stand out?
Yeah, quite a few. For instance, on May 21st, Wednesday, we saw a significant crossing in Sierra Cables worth over 20 million rupees. Yeah. And a much larger one in Union Bank that was over 105 million rupees in one go.
Wow, okay. Big money moving there.
Definitely. And this trend continued on subsequent days. Thursday and Friday saw large trades in companies like Dialog, JKH again, LB Finance, Sunshine Holding, and Tokyo Cement too.
So quite a bit of that significant institutional or high-value investor activity happening beneath the surface, it seems.
It suggests that, yeah, those large block trades point towards some potentially strategic moves by bigger players in those particular stocks.
Now let's zoom in again, maybe on a broader selection of individual companies across different sectors and boards. How did they fare?
Okay, yeah, the report gives a snapshot covering a wide range. Everything from banks like Amada Bank and Commercial Bank to companies in capital goods, consumer services, financials, materials, real estate. Many different sectors represented.
And what's the picture like when you look across that diversity?
Well, what's really apparent when you look at this diverse group is the varied performance, even within the same sector. For example, looking at banks, some saw their share price edge up slightly, while others saw a small dip. It wasn't uniform. And the same holds true for companies in other sectors, like, say, capital goods or consumer durables. Some up, some down, some flat.
So it really underscores that the market isn't moving as one single block, right? individual company factors are playing a big role.
Absolutely. It's not a monolithic movement at all. And we've also highlighted in the notes a few companies that saw particularly high trading volumes or maybe significant price swings during the week, which could be areas of interest if you happen to be following those specific stocks.
Right, worth digging into if those names catch your eye. It's also important, I think, to mention the other news and announcements that often come out alongside these numbers.
Definitely. The full report includes links to all sorts of other relevant information,
Uh-huh.
things like scrip dividends and cash dividends that were declared,
Okay.
details on companies that might be on a watch list or have had their trading suspended for some reason. There's also info available on the second board, any share repurchases happening, potential changes in company secretaries or registrars, capitalization of reserves.
AGM notices too, I imagine.
Yep. AGM and EGM related notices are there, plus dealings by directors' appointments, resignations, retirements, also corporate disclosures, news about any new listings, any trading halts that occurred,
Financial reports.
financial reports, yeah, and various circulars and directives from the CSE itself and the SEC. It's all linked in the full weekly summary if you need those finer details.
Good to know it's all compiled there. Finally, before we wrap up the data points, what about the overall market valuation metrics? PE ratio, price to book.
Right, the overall market stats. The price-earnings ratio, or PER, for the market as a whole, saw a marginal increase week on week. It went up very slightly.
Okay.
Same for the price-to-book value, PBV. Also ticked up a tiny bit.
And dividend yield.
Interestingly, the dividend yield experienced a slight decrease, just marginally down.
And market cap.
Overall market capitalization did increase, which makes sense, given that general upward movement we saw in the main indices like the ASPI, reflects the overall value going up slightly.
Okay, so let's try and bring it all together then. What are the main takeaways from this week on the CSE?
Well, I think the big picture is this.
Hmm.
We saw a definite increase in trading activity, a noticeable pickup.
Yeah, that turnover jump was significant.
It was, and it looks like domestic investors were the main drivers behind that surge in activity. Much more local participation.
While foreign participation dipped, interestingly.
Exactly. And while the main market indicators like the ASPI showed a slight positive trend, the fact that the S&P SL20 hasn't quite kept pace this year, it suggests maybe that the gains aren't evenly distributed across the very largest companies. Performance is varied.
Right. Anything that particularly stood out to you as an aha moment?
For me, the key takeaway, or perhaps the most interesting point, is that noticeable shift in domestic versus foreign trading volume. The surge in domestic activity coupled with the dip in foreign. It really does make you wonder about the underlying reasons for that change in participation. What's driving local investors right now? Why are foreigners perhaps pulling back slightly? And what might that signal about future market trends? It's something to watch.
Absolutely. Well, we hope this deep dive has given you, our listener, a much quicker route to understanding what's been happening on the Colombo Stock Exchange recently without having to sift through all that raw data yourself. We've tried to pull out the highlights.
And hopefully this leads to a crucial question for you to ponder now. Given the trends we've discussed, the increased domestic activity, the mixed index performance, the sector variations,
Right.
which specific sectors or individual companies might now present the most compelling opportunities? Or perhaps which ones carry the most significant risks based on this data?
Good question.
We really encourage you to take this information and maybe delve deeper into the areas that particularly piqued your interest during our chat. Do your own homework from here.